Carly. So what's on the docket
Okay.
and
All right.
how
You
have
want
you
me to?
been?
I've been good. Thank you. I hope you can say the same. You ready for me to share my screen?
Oh, yeah, really
Okay. Yep.
ready.
Let's do it.
Did you ever think the grains would get this cheap, Carly?
Um, I no, I've been well, soybeans, yes.
Yeah,
Corn, no. I was probably about 30 cents early to call the bottom in corn, and
okay.
30 cents in corn's a lot, or
Yeah,
historically. All right. Okay. So here's what we've got. I'm going to start with natural gas just because I think that one's pretty interesting. Natural gas has been really,
yeah,
is that okay to start with natural
yeah.
gas?
Oh, yeah.
Okay.
It's important.
Yeah, this is a monthly chart of natural gas. This is the one market. I mean, they call it the widowmaker. There's a good
Yeah,
reason for that. It truly is. But it's such a fabulous example of how commodities operate. They boom, they bust. I don't think that's ever going to change. Most commodities, because most commodities, when prices get high, people stop buying as much, and producers produce more, and vice versa on the bottom. So you just always get this sideways boom or bust. The booms can be stunning, and the busts can be devastating. It is what it is. This is a chart that dates back to like early 2000s in natural gas. And you can see, if you remember a year and a half ago or so, we were
yeah.
trading around $10. And at the time, literally, I'm not going to say all analysts, but almost all analysts were thinking $20 because nat gas in Europe was trading at
Right.
$20. People were spending insane amount of money for call options above the market. Like I remember seeing, and I remember because we were short some, and I just could not believe the stuff I was seeing. Like people were
Yeah.
spending 4 or 5 grand on $20 calls with a month to go, a month expiration. I mean, just complete
Well,
insanity.
sounds like Nvidia. People buying
Right?
$1,300 calls.
100% is the same
Yeah.
thing, but we see how these things end. Now it doesn't end immediately. Sometimes it goes longer than we all expect. But those types of things, that kind of euphoria, it just never, I've never seen it end well. It's usually pretty ugly, and this is exactly what we're getting.
Yeah. And
So now what?
look left at
Yeah,
all that. That's
yeah.
like
Look at this.
historical support that we're on.
Correct. Now this box here, this is before fracking. Obviously, fracking has been a game changer. It has tamed the market a little bit, but we still get these big bumps. I think we're going back into this stage as opposed to this stage. So when we had a rally a few weeks ago, people were starting to buy 6, 7, $8 calls. I could see it in the tape, and I was just thinking they're thinking about 2022, 2021. They forgot that we spent a decade trading between like $2 and $4, and that's probably what we're going back to is this kind of scenario. But we are sitting on very long-term support. So we like playing the upside in that gas from here.
How
Options
you
are
doing it? How you doing it with options?
so we'll probably put something fresh on today. We'll probably do some sort of a bull call spread with a naked put. Um, so I mean, probably looking at something, this is just hypothetically selling like maybe a 170 put, 175 put
Okay.
in July, and then using whatever we collect to buy some sort of call spread. The days of getting really fat call spreads are probably over because the premium just isn't there, but you should be able to get something like a 250, 275, maybe 280 call spread. So that's 2 or 3 grand profit potential. And if you sell a put to pay for it, you're getting a free trade. Of course, you're accepting risk under the market,
Yeah.
which you never know. I mean, we saw crude oil go to zero, so maybe nat
Yeah.
gas goes to zero. I don't think it does, but I'm not going to say never.
How much time do you buy? So you'd go out to July. That's
I'd probably do
normally in
July.
your options trades, and a lot of people, and I know that things that
Hmm.
we look for to happen seem
Hmm.
to always take longer than we
They
think they're
do.
going to, right?
They do. Yeah.
So, people cut themselves short by not buying enough time because
Right.
they don't want to pay the huge premium in time. So,
Correct.
um, you you kind of soften that by doing verticals where
We
you're
do.
taking in premium. Plus, you go out and fund it with
Hmm.
if you're bullish with a put. on the
Right.
opposite side. So do you normally go out like July is 6 months away, 5, 6 months
Yeah.
away?
July is
Yeah.
about 120 days. I've got the chain up here. And actually, I misspoke. We probably would be selling something closer to a $2 put if we went to July. I was thinking the June prices. But
Oh,
in any case, we'd be doing, I'm going to show you real quick a trade that we have that's very similar, but in a different market. So you get an idea.
okay.
But the idea is we're trying to sell enough premium to purchase whatever options we want. There's good and bad to that. I don't have time to for all the nuances in this type of a presentation, but if you go to our website, we have a lot of information on that. So I'm going to just pop this over here. We are bullish treasuries in the short run here. Well, actually, in the long run too, if you really want to go there. But
Okay.
we think treasuries, like this is a daily chart, um, kind of holding a line. We've retraced nicely from the wild rally that we saw in December, and I think
Right.
that's what needed to happen. One thing about treasuries is I mean, for most of my career, treasuries have been a very boring market. Nobody talked about it. Nobody wanted to do anything in there. The last couple of years, we've had a lot of volatility. I think we're probably going back to boring, and so we're comfortable doing trades like this because I don't think we're going to get anything like what we saw last year. I think that was one and done. It was very unusual. Probably not going to see that again. So we're pretty comfortable selling premium to pay for option spread. So in this situation, this is the same strategy that I was just mentioning, but you can see how it might work. We're buying and we put this trade out to our clients a few days ago. So for educational purposes, I'm sharing it. We're buying a 120 call in June, selling a 123. So it's a 3-point spread. It's a $3,000 spread. So all treasuries have to do is kind of bump back up into this upper Bollinger Band. Even if it's in a downtrend, there's a pretty good chance we get somewhere up in this vicinity.
Yeah.
And we're using a 112 put to pay for it. And I think we're getting filled at basically even money, maybe paying a tick or two. So it's essentially a free trade as long as we are comfortable accepting unlimited risk under 112.
Right.
Haven't spent much time under 112. This spread only has about 90 days to expiration. So um,
So the put that you're selling should melt. We're into the decay period.
They should. Yeah, they
Yeah.
should melt. I mean, as long the only way these are only going to a trade like this, you can make money if you're right, obviously. If you're wrong, it's kind of no harm, no foul. Basically everything expires worthless. If let's say the market were wrong, but the market trades somewhere between 116 and 112 at expiration, we're no harm, no foul. We didn't really lose anything, maybe our time, but that's about it. The only risk in a trade like this is if you're just really dead wrong. If we're dead wrong and the market slides below 112, we're in trouble. So that's
Okay.
where it goes. But to be honest, if we got under there, I wouldn't mind being long a futures contract, which is essentially what that position would become.
Interesting. So I know that was a trade, but when you look
Uh-huh.
at that, you said long term too. Do you think we're
Yeah,
going to take out those highs, even though your strike on the call you sold is
right.
right around there? Those highs.
I do. I'm going to show you a long-term chart in just a second here.
Okay.
Let me grab it. And I'm sorry, I'm placing a trade real quick for a client. Sorry.
It's okay. Carley live.
Yeah. That's the thing about being a broker. Nothing, markets don't close for us. We're always in the thick of it.
Do you get to sleep?
Okay. Not much to be honest.
Okay.
Okay. All right. If the markets are quiet, I can comfortably sleep, but I'm always wondering what the heck's what I'm gonna wake up to. So okay. All right. So this
What a
is
life.
this is a 30-year bond chart,
Yeah.
monthly.
Yeah.
And we can see I call this the Fed instability mandate. As soon as the Fed started interfering deeply with things, they did it to contain volatility, but you can see that's not what happened. It's been just a Wild West show since. Last year, we had obviously this, basically a crash in treasuries. That's the only way I can describe it. And we've kind of come up above this long-term trend line. Hopefully you can see that. Let me see if I
Yeah.
can zoom in just a little. And we're just I'm going to move this so you can see what's going on here. This pullback from January February area has kind of put us right back on the long-term trend line, which I believe has a pretty good chance at holding. I mean, you never know, but I think I look at this as kind of the breakout of the downtrend, and now we're just retesting that breakout. That's very common in markets. If I'm wrong and this level breaks, then all heck could break loose, and we could be looking at like 105 in bonds, somewhere in there down here. I don't think the odds of that are very good. I could be wrong, but I think we hold here and then we kind of move our way up into like the 130s, 140s in bonds. And what that would mean is, I mean, we're not going back to 1% interest rates or on the 30-year, maybe 2 or 3, but we could easily see, in the 10-year, I'm thinking, honestly, in the 10-year, let's look at that real quick.
320. Oh, okay. I'm thinking yields.
Yeah, no, yep, I'm talking yields as well. My fault. So this is a 10-year note, which is a little better representation. You squeeze that a little more. I think we could see at minimum 3.25 or so, somewhere in that ballpark. In the 10-year, I wouldn't be shocked to see 2% again. I know that's not really a common outlook, but let's face it, 5% wasn't a common outlook over here, but yet again, yet that's what happens. So sometimes markets do really wild things that most people don't expect, but that's just how it works. There's a lot of money on the sidelines searching for yield, and if anything goes wrong in the equity market, treasuries are a pretty good place to be.
Yeah, they want to capture yield, have a chance for capital gains instead of just sitting in 5% money markets that could go away.
Correct. Yeah. And if the Fed starts lowering, those money market yields are going to drop from 5% to whatever. I mean, we've been there, done that before. It happens very quickly. So I mean, treasuries have not been a great place to be the last couple of years, but I think that's going to change. And I think people will start to appreciate them again. And speaking of the stock market, actually, I'm gonna share the Nasdaq chart first. Picking tops in the stock market's a really tough game because the stocks almost always go up over time, and we get these type of euphoria situations, like in my opinion we're in now, that they're unsustainable most likely, but they can go on for much longer than any of us could stay solvent. So I think that's the situation we're in. This is a Nasdaq chart. This is a Nasdaq futures chart. You can see if you draw a trend line from the 2000 high, so basically the dot-com bubble high, through late 2021, it comes in right around 18,000, which is where we are. Maybe we break through it and keep going, but I have very serious doubts. I feel like the odds are in favor of a pretty nice correction here. Not only are we seeing some technical resistance, but the RSI is a little suspect when you see the market making new highs. This is a new high from 2021, and RSI isn't following.
Glaring.
It's a really big red flag. Now, that doesn't mean we turn around today. Maybe it's a month from now, maybe it's 2 months from now. But the odds of us continuing on this upward trajectory without some sort of digestion is pretty slim. So.
Okay, you have a view on the dollar?
Let me look. To be honest, the dollar is kind of just in the middle of nowhere.
Okay.
This is my chart. So at this point, I think we're probably gonna. I mean, to be honest, I don't have a strong opinion either way. We're right in the middle of my support resistance areas. I'd be a big seller at 107 if we see it. Probably a buyer at 99 if we see it, but between there, just kind of noise.
Okay. Anything else? I mean, gold has been comatose. You have any lows that you see due in silver? And do you follow the miners at all, Carley? No, you mainly do commodity futures. So
I don't do a lot with the metal. You can see this chart I haven't updated in a while because look at the silver's just gone nowhere. There's really, I just kind of stopped looking at it until it starts doing something. So I really, silver and gold, I both have a positive outlook. Like the previous speaker mentioned, makes sense to be a buyer on dips, but like you said, it's not dipping. So, I mean, I think Other than one thing I can say about gold is the options are unusually cheap right now. The volatility is as low as we've seen in several years in gold. So if you did want to play the upside in gold, you can buy some cheap, like 2,200 calls, something like that, just to have a foot in the door. So if something erupts, because the thing about gold is it'll do nothing for years, sometimes a decade, and then it makes its move all at one time. And if you're not in, it's hard to chase it. But if you are in, it's hard to justify it because gold doesn't earn interest. You're using that money in a market that's going nowhere when other things are moving. So it's really hard to justify holding on to a whole bunch of gold. But you could buy some cheap calls right now. There's some opportunities for that. Call options are obviously, I don't want to say lottery tickets, but that's kind of what they are. You pay
Okay.
a limited amount of money and it either happens or it doesn't. Um, you did mention the grain, so let me pull up the corn chart here.
Yeah, we're getting a reversal week. Is this a weekly? Yeah.
Yep, this is a weekly. I think we're about done in corn. I thought we were done on this trend line. We
Yeah.
started playing the upside here. It failed,
Yeah.
but
Yeah.
there's a lot of farmers in the cash market that were holding on to their grain, hoping for higher prices. And I think, unfortunately, there was a lot of panic selling in the cash market that caused this. Also, speculators are sitting on one of the largest net short positions ever in the grains, and so everybody's short. Cash markets probably washed out a lot of the extra inventory, not all of it, but most of it. And we're going into planting season, and a lot of things can go wrong. And 430 seems really, really cheap for corn. At
Yeah.
least, yeah, at least this time of year. So
Okay. The wheat
um,
has a little better structure than corn and beans. It hasn't made
it
it's
does.
still holding the lows.
It does. Let me see if I can squeeze this in here. So wheat's been all the grains have just had the problem is wheat and corn can't bottom until soybeans bottom. And I think we're finally starting to see a low in soybeans. We've been calling for somewhere between 11.50 and $11 to be the low in beans. Jury's still out whether that occurs, but I think that's probably what's in the cards here. Also, this week is first notice day. So March contracts going into expiration, and a lot of times you see market reversals around first notice day because for whatever reason people wait. People that are in bad trades, let's say people that were long the grains,
Yeah.
they hold on to the very last minute, and then when their broker says, okay, you have to get out, they get out, and a lot of times they don't get back in. So it's almost like they drag the market down, and then
Yeah.
once they're out, the market's free to go back up. And so that's a lot of times what you see.
Why don't they build
But
a silo and take delivery?
well, I mean, that's one way to do it.
uh, okay, so I think that I mean cocoa went bananas,
Yeah.
coffee shaping up, cotton shaping up. Um, are you pretty much a commodity bull? Look at cocoa. Wow.
This is cocoa. This is silly, and this has actually been really sad. I hate to criticize the exchange because there's only two exchanges in the United States, and as a broker, I can't really be on their bad side because it's my
Yeah.
business. But I really feel like the ICE exchange dropped the ball here. They just did a very poor job. Cocoa margins down here when the markets were quiet were like $1,800 per contract, and that was reasonable for that type of market.
Yeah.
They kept the margin at $1,800 until about here. Well, what happened was everybody built up massive, massive short positions, like just massive because the margin's so low. So they underestimated the risks. And once all that, all the small specs and people that just, were on the
Yeah.
wrong side of it had huge positions, they doubled the margin overnight, and then it just became out of control. Um,
It's like the
so a
nickel
lot of
market a few years
yeah.
ago.
So a lot of this is probably, I mean, I'm not saying cocoa wouldn't have went crazy anyway, but it probably would have been contained somewhere in here, not not up here. This is just insanity. And so it's too bad. I'm sure a lot of people ruined their year, probably maybe even their life,
They're,
which is
yeah, that's
horrible.
really
Yeah,
sad. That is.
it's sad. Yeah.
Yeah. All
Um,
right.
but
Anything else you want to?
no,
I
but
mean,
for the
you've
most
really
part,
showed us a lot. You want to show your website, Carley, and
Sure,
so
let's do that.
people view this and have an interest in trading commodity options, all options, futures options. Can
Mhm.
Carley has her own branch.
We do.
It's a
So
branch, right?
we're a branch of Zaner Financial Services. Zaner's located in Chicago. It's so much warmer in Vegas, so here we are. Um, but DeCarly Trading is the website, and if you're interested in just learning, I mean, we're a brokerage service. If you're interested in learning about the markets, we have lots of free educational videos, articles. If you're interested in learning about our services, that information's there too.
Carley is a consummate pro,
Thank you. I appreciate that.
and always look forward to talking to you, Carley, because you bring, you don't do typical. I was on an interview yesterday, and I gave my version of typical CNBC analysis, and they would
Yeah.
say something like this: "Well, natural gas is at historical lows. It could rally unless selling comes in to take out the lows, but if it reverses, it could go higher until it fails again." Huh? Trade
Yeah.
that. Trade that.
Yeah.
Anyway,
Well,
you take a stand.
well, thank you. I try. Sometimes I'm wrong, and that makes taking
Um,
a stand not so fun, but it's okay.
well,
It's part of the game.
it is. So, Carley, I hope you have a great 2024. We've been talking for a couple years now, 2, 3 years.
Yeah. I think, yeah, at least two.
Yeah. So, I really appreciate your contribution to informing and edifying the faith community, and hope that
Thank you.
2024 is one of your best years ever, and not just in the markets, because trading is what we do, it's not who we are.
I appreciate that. Thank you. It's been my pleasure.
All right, Carley Garner, everybody, check her out on X at Carley Garner,
At
and
Carley
go,
Garner. Yes.
yeah, and check her out, her website. Great research. This is just the
Yep.
tip of the iceberg, what she showed us today. And that's, people are thanking you, Carley, and that's going to be a wrap. So
Thank
don't
you.
just count your bonds and natural gas and grains, count your blessings, and you could join the team in about 20 minutes. Adios, everyone. Good hunting. Have a good day. Thanks again, Carley.
Thank you.
All right. Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.